All right, let's jump right in. We're going to recap the week's market action and take a look at what's just around the corner. Hey everyone, and welcome to Value Vest Daily. In this week's explainer, we are diving into a real head-scratcher. The market's hitting all-time highs, but at the same exact time, fear is absolutely spiking. So we're going to unpack exactly what went down last week and what you really need to keep your eyes on in the week ahead.
So yeah, here's the big puzzle right up front. The major indices hitting brand new highs. Awesome, right? But the market's biggest fear gauges are flashing bright red. How does that even work? What is really going on under the hood? Well, let's get into it.
So first up, let's talk about last week. And really, it was a classic story of gains versus fear. It's like one of those things where everything looks totally calm on the surface, but just below, there's a ton of anxiety brewing. And just look at the numbers. On the surface, everything looked fantastic. It was green all over the place. You had the Nasdaq up 2.8%, the S&P 500 up 2.3%, the Dow up 1.8%. If you only looked at this, you'd think, wow, what a great week. Nothing to worry about, right? Yeah, not so fast. That was not the whole story. Because while all those big numbers were climbing, the actual feeling, the mood in the market, it was getting a whole lot worse. And this is what I'm talking about. This number right here, about 17%, that's how much the VIX jumped in just 1 week. Now, you probably know the VIX is what we call the market's fear gauge. So when it shoots up like that, it means investors are getting nervous, they're expecting more chaos, more turbulence, and they're basically paying extra for protection. And hey, if you think that's wild, check out what happened in the crypto space. The Crypto Fear and Greed Index absolutely cratered, falling all the way down to a score of just 10. 10. That's not just fear, my friends. That is straight up extreme fear. We haven't seen a number that low since way back at the start of the year. So that's the big question, right? Why are we seeing this massive disconnect? Well, to figure this out, you gotta follow the money. So let's decode the money flow and see who is buying and, more importantly, who is selling.
Okay, this right here tells you pretty much everything you need to know. On one side, you've got the big players, the institutions, the hedge funds. What were they doing? Selling. They were net sellers to the tune of about $10 billion. But then look at the other side. Retail investors, folks like us, were buying like crazy, pouring in about $5 billion. This is a huge divergence. The pros are cashing out while the retail crowd is jumping in.
And over in the crypto world, the story was even more intense. We had retail traders in what the data calls max desperation mode. Basically, they were panic selling as prices dropped. Meanwhile, the big institutions, they were kind of sitting on their hands, maybe trimming a little here and there, but mostly just watching. And the result of all that? The sellers were completely in the driver's seat, pushing the whole market down.
So what was pushing everyone to act this way? Well, that brings us to the bigger forces at play. We're talking about liquidity and the big headlines that were shaping the whole market. The news last week was a real mixed bag, a classic push and pull. So on the plus side, fears about a U.S. government shutdown kind of faded, which helped things out. But at the same time, you had all this talk about tariffs heating up again, plus all the geopolitical stuff going on. That had a lot of people getting nervous and running to safe havens like gold. It's this back and forth that creates so much uncertainty. All right, let's talk about the fuel that makes the market go. Liquidity. We're looking at the global M2 money supply here. Think of it as just a big pile of cash and money that's easy to get to. It's sitting at nearly $96 trillion globally. Now, it did go up a little bit, but the growth is, well, it's pretty modest. And that's a really important point, because it means there isn't this giant tidal wave of new cash ready to flood in and push prices way, way higher. It kind of puts a ceiling on things. Okay, so that's the look back at last week. Now, let's turn the page and look forward. The week ahead is absolutely critical, so here is your watch list for what you need to be paying attention to. And believe me, it is a packed calendar. Monday kicks off with inflation data out of Canada. Always good to see what's happening up north. But Tuesday is the main event. We get the FOMC minutes. This is our chance to be a fly on the wall and see what the Fed is really thinking about interest rates. Then we might get some delayed data on Wednesday, and we finish the week with flash PMIs, which are a great real-time check on how the economy is doing. And it's not just economic data. We have some absolutely massive earnings reports coming up. Nvidia reports on Tuesday. Their numbers could literally move the entire tech sector. And then we get a really crucial look at the health of the consumer from the big retail giants, Walmart, Target, Home Depot, what they say about the upcoming holidays. Everyone is going to be listening to that very, very closely. Okay, so let's pull all these threads together.
What is all this, the fear, the different money flows, this jam-packed calendar, what does it all mean for you?
Well, from what we're seeing, we think this tug of war in the stock market is going to continue. So expect some choppy trading. But there is a slight bias to the upside, especially if those Fed minutes sound a little less aggressive. For crypto, though, that extreme fear reading tells us the selling probably isn't over. We're likely going to see some key support levels get tested before things finally bottom out.
So if you're looking for just one signal, one thing to watch, this is it. The big green light for risk on. It's when you see the VIX fall back below 20 and stay there. Until that happens, the name of the game is caution.
And of course, I have to say this. None of this is financial advice. Everything we've talked about today is just for educational purposes. So please, always do your own research before making any decisions.
Hey, if you got some value out of this breakdown, it would mean a lot if you'd hit that subscribe button, give this a like, and maybe share it. It really does help us keep bringing you these insights every single week.
And hey, one last thing. Is there a specific stock or crypto you're curious about? Let us know. Drop the ticker symbol down in the comments, and we'll try to do a deep dive. Thanks so much for watching. We'll leave you with this to think about. In a market this divided, are you siding with the pros and heading for the sidelines, or are you with the retail crowd chasing these gains? Let us know what you think.